we are starting things off with markets, and according to the latest crop progress report from the USDA, U.S. corn held steady with 65% of the crop rated good to excellent. Soybeans were up 1 point from the prior week at 60%, with 63% of the crop having reached the blooming phase. Our attention remains focused on the forecast and drought concerns throughout the plains and the Midwest. Elaine Cub joined me this week to discuss how markets are reacting to all of that. And we started off by getting a check on how things are at her farm in South Dakota, where 90% of the state is in some level of drought.
This is the time of year when you really see it in the spring wheat. A lot of my neighbors have already baled up their spring wheat because the yield is just not going to be there. And I suppose it'll be another couple weeks before we get real harvest reports for the spring wheat, but I don't have high hopes for that. And I think that's pretty widespread, not just here in eastern South Dakota, but as you mentioned, up into North Dakota. Minnesota is also dry, and even the Canadian prairies. So all of the North American spring wheat is pretty grim, like you say. And the corn and soybeans, they still look green. They're not firing, they're not dead. So it's just hard to say. It's more of a mystery of just how grim that yield prospect might be.
And Elaine, a lot of times our focus is so much on the main crops like corn and soybeans that we don't think about pulse crops. And I know pulse crops are big in North Dakota, things like dry beans, chickpeas. So what are those producers dealing with right now?
Yeah, that is just terrible when you look at the North Dakota Crop Progress Report. The pasture conditions are 5% good and 0% excellent. But the specialty crops that you mentioned, like the dry edible beans, I think it's something like 13% good to excellent. Maybe sunflowers and the canola is maybe more like 19 or 24% good to excellent. So very poor. But Troy, it's not just in North Dakota where those specialty crops are. There's also some grown in Nebraska, right? So if you were in a situation where you actually had less horrible drought, I think it is dry in western Nebraska too, but there could be some opportunities for some producers there who actually have the yield to take advantage of some of these marketing problems that are likely to occur this fall when the buyers and the users go out and looking for these specialty crops and they're just not going to be there.
Can you tell us what you're tracking with soybeans as they move into their critical stage? Is it more with weather?
Well, what's really interesting about soybeans is that this critical stage is happening earlier this year. We've had such a fast accumulation of growing degree days all across the country, really. And now we're seeing soybeans, I think 63% are already blooming, which is 6% points more than usual, maybe about a week faster than usual, which means, and Al Dutcher can fill you in more about the forecast, but my understanding is it's going to be hot and dry for the next couple of weeks, which means this is the time frame when soybeans most need good weather and they're not going to get it. So I think the soybean market itself should likely continue to be quite volatile, which we've seen, of course, over the past month or so. You get wild daily swings. This week, the swings haven't been as wild, but I think it's possible that we'll see more of that in the future when this weather happens right at this critical time frame for blooming soybeans.
And next up, let's talk about corn basis. Can you give us an idea of where it's at in your area and what we could see maybe happen?
Yeah, my particular area happens to be one of these pockets where I think the elevators got caught short, and it's very strong. It's over $1 basis for old crop corn here in South Dakota, which is unheard of. And there's various other pockets throughout the Corn Belt, even out east in Ohio. There's some places where you have this basis of more than $1 over. But largely, I think the strongest parts of the old crop corn market probably peaked a couple of weeks ago. The panhandle of Texas, the feedlots there, you're still seeing some of them bidding over $7 for cash corn, but largely through the middle of the Corn Belt, the basis bids are more like 60 over or 80 over, somewhere in that $6.50, $6.80 range. So extremely good prices. If you were somebody who was aiming for this hot July summer market to sell whatever corn you have left in your bin, now is the time to shoot your shot, right? Like this is the hot opportunity.
And Elaine, you were just talking about selling dates to keep in mind, and we'll often talk about mid-July as a time when folks can get some sales in. Well, here we are almost in August. Are there any upcoming dates that we need to circle on the calendar as ones that we should be aware of when it comes to marketing?
Well, we'll kind of talk about new crop marketing here. And you're right that this is traditionally a pretty good time. I mean, the highest probability of seeing the date of the absolute high of the new crop market is usually in mid-June, because that's when the corn market is facing the most risk, when you have the highest chance of having some kind of a weather market or weather risk premium in the market. This year, I think folks have been pushing back their old crop marketing because we've been so uncertain about even if we're even going to have a crop. And I think some of us up here in the Dakotas are still in great question about whether or how much grain we're even going to have to sell. But if you're somewhere that you've had enough rain that you feel you're going to have enough corn or soybeans to bring to market, yeah, this I think is a good opportunity to lock in some of these new crop prices. I think there are certainly possibility that prices will go higher into harvest if we continue to have this dry weather and more recognition of the lower yields we're likely to have. But I think there's some certainly possibility of seeing lower prices, seasonally lower prices into harvest. So with that sort of 50-50 idea, I think a risk management strategy would be, yes, lock in some of these new crop prices.